Should you buy stocks now or wait? That is the question we are going to be answering in this video. I'm super excited to get this video out to you guys because there's a lot we're going to go over. And at the end of this video, I am going to tell you the exact point in which you should be buying stocks, because it is at this one signal that will tell you when this bear market will end. Before we get into it, be sure to give this video a nice thumbs up. I really appreciate the support from all you guys. And let's get right into it. Okay, so right here I have a chart of the S&P 500 ETF. And as you all know, stock market has fallen off a cliff in the past month or so. Now, the interesting thing I want you to see is that stocks have fallen in a straight line, which usually doesn't happen in a bear market. What typically happens when stocks enter a bear market is they move in waves. So stocks go down, then they come up a little bit, and then they continue down and go up and go down and move in a predictable wave pattern like this. But that's not what we see in the stock market in the past month. What we've seen is stocks are going up and then boom, fall right off a cliff. And guys, what I want you to notice is how far away the price is from the 20-day moving average. The 20-day moving average is the green line on this chart. And stocks have fallen so fast that they're now a considerable distance away from this 20-day moving average. Like I said earlier, when stocks move in wave patterns, they typically bounce off a point such as the 20-day moving average. So for example, stocks could go down, then they would hit this moving average again, then go down a little more and hit it again and come down and come back up. But again, that's not what we're seeing. Lately, we've had a few up days, and a lot of people have been asking, is this the bottom and should I be buying stocks now? And what I'm doing is I'm holding off until we see some sort of confirmation that this bear market is over. And I'm going to be doing that by using the 20-day moving average as a buy point. Because as I've said in previous videos, moving averages act as a signal. When the stock goes above a moving average, you can assume that it's going to keep going up and stay above the moving average. And when a stock moves below a moving average, the odds are that it will keep going down. Now, I know some of you may be skeptical that it's this simple, but I'm going to show you something. Here I have the S&P 500, and all I have on the chart is the 20-day moving average. And we can go back and see how prices reacted when it's moved above the moving average in the past. So as we see, this is this big drop. Price broke above the 20-day moving average, was right here. And look what happened after that. Stock price went straight up. We can keep going back again. Broke above right here. Stock price moved straight up. Again, after this big drop at the end of 2018, you might have been thinking that the stock market's going to keep going down. But once price moves back above this 20-day moving average, boom, price goes all the way straight back up. And so this has proved time and time again to be a reliable indicator of stock direction. And we can even keep going back further. There's so many instances, stock breaks above here, rides the trend all the way up. We can keep going back all the way. This is in 2017 at this point. Look at this. Stock breaks above the 20-day moving average. Look at that run up. All the way from 250 all the way to almost 300. That's a huge swing you could have got. And so I certainly don't do this, but if you wanted an investing strategy, something you could do is say, I'm going to buy the S&P 500 when it moves above the 20-day moving average, and I will sell it when it's below the 20-day moving average. If you did that, there's a pretty good chance that you would beat the S&P 500 return as a whole. So when people tell you it's impossible to beat the market, it's really not hard at all. You could do something as simple as this little strategy I showed you here, and you would most likely beat whatever the return the market does, because it protects you from all the downturns. You would be selling at the top right when the price broke below the 20-day moving average, and it would save you from sitting through watching the stock market fall off a cliff. So going back to where we are right now, look how far the price is from the 20-day moving average. It is a huge distance away. And so before I start buying, what I want to see is this 20-day moving average come close to where the price is. Sort of like this, would come down and then go like this. And then the price would stay around here, and eventually it would break above the moving average. And it's right here that I'd be buying stocks, because then the odds are that the stock market will continue going up. Now, what are my thoughts on how much this market is going to move lower, if at all, or if have we reached a bottom? I personally think that we have not reached a bottom yet, and we still have lower to go. And I will show you on this chart, one of the major support levels we had was this at the end of this drop at the end of 2018, and it was around the 2350 level. And so what you saw was stocks were holding that level of resistance over the past couple of days, and then this past day, stock prices blew past that support level. Now, will this hold? I'm not sure. What I'm waiting to see for on Monday is if we have if the stock prices open and close below the 2350 level, which is around right here. If stock prices stay below where my cursor is for a day or two, then the odds are increased that this will go lower. Now, in terms of where I see stock prices ultimately going, there is another level of support right around here, around the 2123 level. And if that doesn't hold, then it could go as low as 1870 for the S&P 500. And so for those reasons, I'm not buying yet. I'm waiting because I still feel like there is a high chance that the stock market will continue going down. And a main point I want you guys to take away from this video is that it's not incredibly difficult to beat the market or to see or to try to find out where the market's going. In fact, it's relatively simple. We could go back to this example. A second grader could tell you when the price moves below a green line, right? It's nothing hard. What's hard is having the willpower and the mental strength to be able to go through with your intentions in the stock market, even when you're losing money. And that's why I say being successful in the stock market is simple, but it's not easy. Because let's say stocks go down and eventually they do break above this 20-day moving average. Are you going to be someone who says, okay, this is most likely the bottom and I'm going to buy in now? Or are you going to be scared and say, the stock market's already been down so much, even though I see the signal that it might be a good time to buy, stocks could continue going down and then I'd lose a bunch of money. That's the hard part of being successful in the stock market, because if you don't invest there and the stock market keeps going up, then you're going to be left behind. And that's what happened in 2008. A lot of people got out when the stock market was falling, but then when it started going back up, no one got back in. And because of that, a lot of people's financial futures were ruined. So we'll see what happens in the coming days and weeks. I wish the best for all of you out there. I know it's a scary time right now in terms of the stock market and in terms of everything else that's been going on. So I wish you all the best. If you learned something of value from this video, be sure to hit the like button and subscribe to this channel. I have videos coming out multiple times every week talking about the stock market and where I am investing my money to beat the market returns. And so that is it for this video, and I hope to see you on the next one. Bye-bye.